Good afternoon. It's Quant Trade Edge, and today I was taking a look at Tesla. Tesla had earnings after the bell yesterday on Wednesday, and this is where it closed before that news came out, 207.83. And then this morning we opened all the way down at 189.70. Now, how do we know if when this happens, if we're going to rally back, if we're going to just go sideways and waste a day, or if we're going to go significantly lower, as we did today, went all the way down to 180.06. Well, I'll show you what I use to determine that, and that is the at-the-money straddle. So there's a lot of noise here. Just focus on the top three bars. I do this for all of the names that, significant names that have earnings, so I can understand where those boundaries are and what to expect from their price action. But here at the top, Tesla, now, we're looking at this a day later, so you have to subtract this change from it to understand what the call and put price were yesterday. So as we mentioned, the stock price closed at 207.83. That's closest to the 207.5 put and call straddle. So $24 minus $16.50 is $7.50. And this nickel plus back, add back the 785, it's 790. So adding those two things together, 750 and 790, we get to $15.40 for the straddle. So when you subtract $15.40 from this closing area, this is the line you end up with. And so think of it this way. When this market closed, the stock closed and the options closed, and the best guess for that the options market made, and it's not just a no skin in the game guess, this is a real guess with actual dollars behind the options market, was that there would be a range, or a move of $15.40. So when you gap down even further than that, that means that the straddle sellers, any vol sellers, underestimated the move. And as soon as you come down here, their calls are worthless. Their puts are, that have been sold are worth more than had been expected. And they basically have to sell stock to hedge that. For people that are staying delta neutral and just trading the volatility, they have to continue to sell stock. The act of selling stock pushes it lower, increases their delta, and they have to sell stock again. And that's what creates what I call a PFL, or a positive feedback loop. And I'll move this to a 5-minute for a second, just so you can see what happened. It opened up in here, 189, went down to 180. $9 move, 5% move. That's pretty significant. Now I'll go back to the 1-minute chart because there's some things I want to show you here. We opened. Try to blow this up. We don't really need volume for what I'm showing here. Okay. We opened down here. Now, this was the pre-market low, and we took out that pre-market low pretty quickly, and that sets our intention. And then we had a little bit of a retracement, but we were rejected by that magical resistance level, which is prior day close minus the at-the-money straddle that we calculated. And from there, we got a hard rejection, and we oscillated a little bit around this pre-market low, and then embarked on a lower mission there. One indicator I find helpful on here is the VWAP. So you can see over here, we got rejected by VWAP, rejected, came up here, couldn't really close above, up, down, and then here, this would have been a reasonable fake out to think that we broke VWAP, but within a couple of bars, it was rectified, and we spent the rest of the day trending lower below VWAP. Now, the actual low of the day was made here at 1134. And then we had a little bit of corrective action. Now, to get a sense for what this means in the options market, early in the day, a 185 put, which is what, 185 all the way down here, was a couple of bucks. And by the time we got to the lows, they were close to 7 or more. So there are significant significant ways to use leverage, in the weekly options to trade these positive feedback loops. Now, if you've seen the recent videos, I was going to post one on what was it? DuPont and DH Horton. No, I'm sorry, 3M and DH Horton. Because we posted a video on Taiwan Semi and SMCI and how to use the next day to buy the dip and get the continuation. Well, the exact same thing happens on down days. If you're looking to get the consolidation to get the next push down, and that they both worked out really well on 3M and DHI. So my point being, over here tomorrow, we're probably going to have a rally up into this, and that would be a selling opportunity for a new low. So, a couple of reasonable resistance levels. This is a resistance level, but it's pretty close to the open. So I don't know that that's a great one. What I discovered on those other two selling stocks was basically the last move into the low of day. So into this low of day, oops, that just makes the tail look longer. Into this low of day, it started up here, 186.58. So that is a good reasonable resistance that if we were to tag tomorrow on kind of call it a morning blip or a little bit of a morning consolidation and move up, that would be a great area to sell. And again, we would target wherever that ended up, probably down here at the 1.272. Which could be around 178, depends on where that final high ends up getting made. So anyway, this is just how I have an early read on whether we're going to continue lower. So if we had gapped down to about here and just spent a couple of minutes here and couldn't really get down below this line, then I would expect it to go all the way back to gap fill. If we gapped to this line and just oscillated around this line, then I would expect that we were in balance and we would literally stay in balance most of the day. So that's kind of how you can have the immediate bias of whether it's rallying, it's going to sell off further, or it's going to be neutral.